Hello and welcome to CIA News Analysis, where we apply the info warrior mindset and worldview to the financial news. Thank you for your support. Well, I hope everybody had a great weekend. Let's get right into our articles here. Telecoms giant AT&T seeks patent for blockchain-enabled social media mapping system. We can see that AT&T is seeking a patent for a blockchain-based social media history map. In the patent, it says that the social media history map platforms described herein may take advantage of the immutable and permanent nature of blockchain records to store and provide access to data representing online transactions that occur on multiple social media applications. Per the filing, content creators would keep ownership of their data on the mapping platform. It says, however, instead of passing ownership of blocks or data between users, a social media account owner maintains primary ownership of his or her online transaction data. What passes from the social media account owner to other users of the social media history map service, such as followers of the social media account owner, is a notion of elevated visibility rights. So what we see here is that last week HTC named Brave's blockchain-based browser as its default browser. Soon after, Samsung, it was found out that they applied for 3 different blockchain-based patents, and now AT&T has applied for a blockchain patent. That means that these companies have spent a good amount of money on R&D, research and development. They're starting to understand blockchain as a technology. Now they've incorporated it into their business plan, and they've edited through those ideas, and now they have actually submitted for patents in order to protect their ideas and how they're going to apply blockchain as a technology to their business. So this is huge news. We see a bunch of big companies moving forward with blockchain as technology. In the article, we can see that the United States Patent Office awarded printing and digital copying appliances manufacturer Xerox a patent for a blockchain-driven auditing system for electronic files. And then we can see that financial services giant American Express filed a patent for blockchain-based system to capture and transmit the image of a receipt. So all the big players are getting involved in blockchain and are moving forward with blockchain as a technology. And speaking of American Express, here in our next article, confirmed American Express is officially using Ripple's X Current. Now remember, Ripple's X Current and XRP token are 2 different things. We see here in the article that the vice president of American Express, Colin O'Flaherty, on Wednesday confirmed that the company was officially using X Current, a blockchain-based financial solution from Ripple Incorporated. He said that Ripple offers instantaneous point-to-point conversations between the sender and receiver of funds, and that provides a real opportunity to alleviate most of the issues our customers are facing. So even with American Express and the amount of transactions that they're able to capture per second, the underlying blockchain technology, whether it's through a permissioned blockchain or a permissionless blockchain, is able to be a win-win for the company and the customers. And now we see all these big companies, right, and all the headlines moving forward with blockchain as a technology. And we talk about blockchain as a technology versus blockchain as a currency in our cryptocurrency presentation. Go ahead and give that a view if you already haven't. A lot of great content in there. It's almost got 4,000 views, so very excited about people getting this content and getting this information and being able to use it for them and their families and be prepared for what's coming, because what is coming, we see that the U.S. federal government, there's confusing regulation for crypto, full clearance for blockchain. And cryptocurrency is blockchain as a currency, and blockchain as a technology obviously has full clearance. We see companies like AT&T, HTC, Samsung, American Express, all of them moving forward with blockchain as technology. Blockchain as a currency will catch up once that infrastructure is built. And we see here that we go down, and it goes beyond just regulations and policies as far as the use of blockchain. We see that in the defense field, the U.S. Air Force Institute of Technology unveiled an app designed to train members of the armed forces to develop and run blockchain-based supply chain solutions, recognizing that such supply chains will most likely be prevalent in the future of military logistics. So it's not just government and business. Here we see in military blockchain-based solutions are going to be prevalent, especially in military logistics. Among the decisions that they will learn to make is what incentive structure best suits a given task, or whether a system should be permissionless or permissioned. Obviously, a government chain would be a permissioned chain. The real issue here is that we're not able to get clarification on Bitcoin and blockchain as a currency. We know that blockchain as a technology is full green lights ready to go, but blockchain as a currency has run into some road bumps, and we can see that here, that while the Commodity Futures Trading Commission, the CFTC, who will be making a decision in January, around January 24th, whether or not BAC's Bitcoin future settled contracts will be able to go live or not, they treat crypto as commodities. The Securities and Exchange Commission, who will be making a decision in late February on the VanEck ETF, whether or not that's going to be able to go live or not, insists that they are securities. And the Treasury Department's Financial Crimes Enforcement Network applies currency rules. And the Internal Revenue Service treats digital money as property. So nobody can make up their mind. There is no consensus on what to treat blockchain as currency as, and those are some of the road bumps that we're working through right now on the currency side. And again, when it goes to the blockchain as a technology side, this is moving forward fast. Moving on to our next article, because we see the big companies getting involved, we see Ripple starting to take over some of that Swift market, as well as doing tests with companies that do thousands and thousands of transactions per second, like American Express. We see the government giving the green light for blockchain as a technology, and we also see with the CFTC decision and the SEC decision coming up in January and February that blockchain as a currency may be moving forward as well. But what does that do for the old guards? What does that do for the CEOs and the bankers? How's that make them feel? Well, here's what they have to say. Blockchain could, quote, jeopardize the safety of current financial marketplace. So, of course, they're coming in, and it's of the CIA worldview and opinion that they are the boy who cried wolf, and they believe, fintech is believed to be a systemic risk to the broader economy, according to a survey conducted by the United States Depository Trust and Clearing Corporation. And they say that as the industry continues to adopt fintech innovations like blockchain, artificial intelligence, and cloud solutions, or also known as Internet of Things, we must ensure that those innovations do not jeopardize the safety and security of the current global financial marketplace. Well, of course they're going to say that they don't want it to jeopardize the security of the current global financial marketplace. In all reality, we have an inflationary system that's on its way out, and we have a deflationary system on its way in. And right now, these two systems are merging together. We see blockchain as a technology taking off with all the big companies investing in blockchain and patenting their ideas with blockchain and moving forward with it. But at the same time, we see the big guys in the sector, like the CEOs and the executives. Here's an executive of the European Central Bank. He defined Bitcoin as, quote, the evil spawn of the 2008 financial crisis. Well, I'm going to throw that right back at you there, banker dude, because what happened during the 2008 financial crisis was the banks made bad business decisions, and they should have went bankrupt and disappeared. But for ease and convenience, the American people were deceived into just giving them the money to sustain the system. They didn't fix the system, they only sustained the system. And now we see bigger debt bubbles, bigger credit bubbles, and we have bigger problems than we did back in 2008. So this is kind of backwards that this guy would come out and say that Bitcoin is the evil spawn of the financial crisis, when really it's the evil spawn's solution to their own financial crisis. The banks created this banking crisis. They made the bad loans, the bad business decisions. They're the ones who have manipulated and controlled the inflationary system. And now they're bringing in the deflationary system, crying wolf that this system is going to hurt them, when in the long run, combined with the law, it gives them the ultimate power to control. Next, moving on to our next article, we want to see how much longer until we see Bitcoin, blockchain as a currency, start to capture some of that market share that we've been talking about. We see Bitcoin now with a $41 billion market cap, yet we have the USD in circulation at $1.5 trillion, when we have the gold market cap at $8.2 trillion, and we have the physical money market cap at $31 trillion. And remember, the jump between $1 billion and $1 trillion is quite significant. So we see Bitcoin at $41 billion and gold at $8.2 trillion. That's a 200 times more than Bitcoin at $41 billion. So Bitcoin still has plenty of room to grow and plenty of market to capture as it begins to emerge as an actual digital asset class and a digital currency. Now, moving back to this article here, he says that mass adoption is 3 to 5 years away. And again, if you go back to our seminar, we talk about price points and a little bit about where price is going to go. And when we see this, we said over the next 3 to 5 years, Bitcoin will start to capture this physical money bubble, the $31 trillion bubble, which is, if gold is 200 times more, and then that's 4 times more, then Bitcoin really has about 800 times growth just to be able to capture this physical money bubble. Then from there, we start seeing blockchain as a technology affect the way our economy works, meaning that blockchain is going to be in medicine, blockchain is going to be in supply chain management, blockchain is going to be in agriculture, blockchain is going to be used on web browsers and cell phone services. Blockchain is going to be used for everything. And we get to that 5 to 10 year period with a combination of digitized assets and all blockchain as a technology combined with blockchain as a currency. It can begin to capture all money, or the $83.6 trillion bubble. But what we do see is this BitPay CEO agreeing with our conclusions that we're going to need 3 to 5 years before we start to see the currency aspect of blockchain really start to take over the market. And we can move down here and say a very big component of Bitcoin's price is certainly speculation. It's investors that are speculating on the future usage and adoption of this technology. I'm sure a small component of that price is the actual utility. That's right. We know that supply and demand is a huge driving force in the price of Bitcoin. And the supply is fixed. It's finite. The demand is what's changing. And right now, the demand is really based on the speculative interest in Bitcoin. But if you've been with us here at CIA News Analysis, and you've been reading all these articles, and you see the fake mainstream news telling you it's died, and you see the financial news telling you it's a Ponzi scheme, yet you see companies like telecom giants AT&T and American Express and Samsung and HTC and all these other companies applying for blockchain patents and applying it to their business models, something's not really fitting together here, right? So now is the time to get into Bitcoin. Now, within this market cycle over the course of the next year, is going to be the best time to dollar cost average your way into Bitcoin and prepare for the future economy, which will see usage and adoption of blockchain technology and also blockchain as currency. Again, thank you guys for joining us here on CIA News Analysis. Thank you for your support.